minus 23,000. That is the July non-farm payrolls print. Economists were modeling a gain of 80,000. The economy delivered a net loss of 23,000 jobs, and the Nasdaq closed up 1.28% anyway. In the next few minutes, why the worst labor number in this cycle became a buy signal. A $36 million insider sale at one of software's favorite names, and a medical device stock that lost nearly 60% in a single session. Let's start with the tape. The S&P 500 finished at 7,755.61, up 0.59%. The Nasdaq Composite closed at 26,686.48, up 1.28%, more than double the S&P's gain. The Dow Jones Industrial Average lagged badly at 54,036.93, up just 0.28%. And the VIX fell 1.65% to 14.90. Read that spread carefully, because it tells you exactly what the market decided today. Long-duration, rate-sensitive growth outperformed cyclical industrials by a full percentage point. That is not a growth is accelerating tape. That is a discount rate tape. Money moving toward assets whose valuations improve when the Federal Reserve is forced to cut. Sector data from the Nasdaq side confirms it. Consumer cyclical led at plus 1.04%. Basic materials followed at plus 0.74%. Consumer defensive added 0.58%. Energy was essentially flat at plus 0.07%. And communication services was the only group in the red, down 0.01%, which is a rounding error, not a rejection. CNN's Fear and Greed Index sits at 64, firmly in greed territory. So positioning was already leaning long into a report that missed by more than 100,000 jobs. That matters for risk management, and we'll come back to it. Now, the three stories that actually matter today. First, our Insider Watch story. On August 5th, Datadog's Chief Executive Officer, Olivier Pomel, sold $36,452,138 of Datadog stock. That is 127,141 shares, executed across 9 separate transactions. He is filed as both a director and an officer, which means this is a Section 16 disclosure with full visibility. Here is the honest analysis. 9 transactions in one window is the signature of a structured, prearranged selling program, not a panicked exit. Founder, chief executives at high multiple software companies almost always sell on a schedule, and reading a single filing as a bearish call is how retail investors get whipsawed. But the size is what deserves attention. $36.5 million implies an average execution price near $287 per share. The question for investors is not whether Pomel believes in Datadog. It is whether the people paying today's multiple for software growth are being compensated for the same risk the founder is actively reducing. When insiders monetize into strength, your margin of safety is coming from the multiple, not from the operator. Second story. The jobs report itself, and it is worse under the surface than the headline. Payrolls came in at negative 23,000 against an estimate of plus 80,000, with the prior month at plus 20,000. The unemployment rate actually fell to 4.1% from 4.2%. But look at why. The participation rate dropped to 61.4% versus an estimate of 61.6%. The unemployment rate improved because people left the labor force, not because they found work. And wages decelerated hard. Average hourly earnings rose just 0.1% month over month against an estimated 0.3%, with the year-over-year rate falling to 3.2% from 3.4%. That combination, job losses, shrinking participation, and cooling wages, removes the last inflation excuse for keeping policy tight. That is precisely why growth outperformed and volatility fell. But understand the trade you are in. The market is buying weakness because it believes rate cuts arrive before earnings deteriorate. With fear and greed at 64, that is a crowded bet on precise timing. Third story. CVRx collapsed 59.76% to $2.39. The sequence is clean. On August 6th, the company reported a second quarter loss but beat revenue estimates. Then, the earnings call transcript hit on the 7th. And by mid-morning, law firms were already circulating investor notices citing a revenue guidance cut and sales execution disclosures. That is the tell. Revenue beats do not matter when management admits the commercial engine is broken. A beat on the quarter with a cut to the year is the single most punished outcome in small-cap medical technology. And a 59% drawdown is the market repricing the entire growth trajectory, not one quarter. Worth noting alongside it, PN Smart Energy fell 61.28% to $3.21 after announcing the pricing of a $5 million registered direct offering. Dilution at a microcap is arithmetic, not sentiment. On to Congress and insiders. Senator Tommy Tuberville of Alabama had 5 transactions disclosed on August 5th. 2 sales of Cleveland Cliffs, each in the $100,001 to $250,000 range, dated May 10th and May 13th. 2 sales of Intel in the same size bracket on those same 2 dates. And a purchase of Federal Home Loan Mortgage Corporation, again $100,001 to $250,000, dated March 12th. The critical detail: every one of those trades was executed in 2024 and disclosed in August of 2026. That is roughly a 27-month lag. There is zero tradable signal here, but there is a real story about how little transparency the current disclosure regime actually provides. On the corporate side, today's insider data has one direction: out. Beyond Datadog, Equinox Partners Investment Management sold $15,385,056 of Gran Tierra Energy, 1.6 million shares as a 10% owner. Toast Chief Executive Aman Narang sold $4,868,788 across 3 transactions. Insmed's Chief Medical Officer sold $3,494,838. An Amcor director sold $2,746,250. Cluster buys today, 0. That asymmetry on a day the Nasdaq gained 1.3% is the honest counterweight to the rally. On earnings, the U.S. calendar was empty today, so the analyst desk did the repricing instead. KeyBanc's Scott Schoenhaus cut LifeMD's price target to $5 from $8, with the stock at $3.45. Raymond James cut Carriage Services to $50 from $60, against a $36.08 share price. Truist trimmed RXO to $28 from $30. On the constructive side, Truist nudged Zymeworks to $32 from $31, and Viridian Therapeutics to $39 from $38. That last one implying 70% upside from $22.93. Notice the pattern. Targets coming down on consumer and freight, edging up on clinical stage biotech. That is the same rate cut trade the index spread showed you. Looking ahead, the U.S. earnings slate stays thin. The next scheduled reports in the data are international. 2 Korean listings on August 11th, with estimates of 6,639.46 and 2,310 in earnings per share, and Empresas Copec in Chile on August 13th at 199.93. Thin domestic supply means macro carries the tape, and every incremental data point gets amplified. Watch 3 things. 1. Whether wage deceleration to 3.2% shows up in inflation expectations. That is the leg holding up the whole rate cut thesis. 2. Whether participation at 61.4% stabilizes. Another leg down turns a soft landing narrative into a demand problem. 3. The retail crowd. Hertz was the #1 ticker on Reddit with 2,564 mentions, up 296.9% in a day. Micron drew 229 mentions, down 16.4%, and SanDisk collapsed 74.9% in mentions to 139. Chatter rotating out of semiconductors and into a single high-volatility name is a late-stage speculation signal, not a bullish one. Today's theme: The market bought a negative jobs number because it prices rate cuts faster than it prices earnings risk, while insiders sold $62 billion into the strength. Subscribe for tomorrow's numbers. No hype.